To today's class. It is now 12 o'clock p.m. Eastern Standard Time. If you're on the West Coast, good morning. Thank you for joining us. Today's class, we'll be discussing a little bit about private lending with your IRA. And I'm so excited to share this with you. It's been something that's really passionate for me because it's how I was able to get my start in utilizing my IRA. And I look forward to be able to answer any questions that we might have after the presentation. Presentation time, we're looking roughly about 15 to 20 minutes. We'll make sure that we make time for any of your questions that you might have as well too. So my name is Cora Matzek. I am the Business Development Manager for the sales team with NuView Trust Company. And where you find me most of the time is out and about at events, looking for those next opportunities to be able to discuss NuView and what we do, and getting people on their journey or starting their journey with self-directed IRAs. So when I had this opportunity to speak about private lending, I always jump at the chance because, as I mentioned, it is something that I'm passionate about. It's actually how I got started. So actually what I was able to do is I started private lending and I was able to privately lend some funds for someone who needed an air conditioner unit. And although it seems like it was something, you don't really think you could go that small. But I was able to create my own loan, my own terms, and lend that money for this person to purchase an air conditioner unit. And as a result, creating my loan, we were able to both meet in the middle. I was able to get a little bit back, and that person was able to get their air conditioner unit that they needed so much for their house. So really, really great things, and that just kick-started my journey into private lending. So really excited to share this with you today. So before we actually dive deep into the content of today's presentation, I wanted to start off by mentioning I am not an attorney nor a CPA. Your individual situation is going to be unique from everyone else's. And there's going to be questions that you're going to have. I always love to push you back to the advisors and people who know your unique situations the best. So keep that in mind as far as if you're thinking of tax-specific questions. How would you create these terms? Things of that nature. Think through those people who would know your financial situations best, and go back and take those questions with them. So we are going to get right into it. So what is a self-directed IRA? So people open their accounts and think, what do I do with this? What is a self-directed IRA? So a self-directed IRA is actually just a marketing term. Your IRA, your Roth, your traditional that was with other custodians will still be the same when you move those over to NuView. What the difference is our menu to be able to utilize and invest in alternative assets. It's a lot larger. So we focus primarily on that private lending, purchasing real estate property, notes, tax liens. It's more about what your custodian has for you to be able to utilize for. So you still do have that option to self-direct. It's how big is that menu? I always like to say that as well too. Look at the menu that your custodian is offering for you. If that's something that you want to do, does your custodian allow you to do so? With NuView, you can invest in alternative assets, real estate properties, things of that nature. We're not going to spend too much time on that today. We're going to be focusing more on private lending and what that looks like. So all of these can be done within your account. So no matter what type of account that you hold with NuView Trust, there are many different types of accounts. You can privately lend or self-direct these and invest in alternative assets. So there are 4 different types of IRAs. So we have our simple, which allows employees and employers to contribute to traditional IRAs. Our SEP, retirement plan option for small business owners and qualified employees. You also have your traditional, your Roth. So one other thing as well too that we offer is going to be our education savings account and our health savings account. The HSA, those go with high deductible healthcare plans. If you are in it, you probably don't view it as a retirement plan, but it is better than a retirement plan because you can get money out early without taxes for qualified medical reasons. But you can still stock it away, $7,000, $8,000 a year. So a lot of people do this in addition with having their IRA. So they're growing it alongside their IRA. I'll briefly touch on the educational savings plans. You can have an educational savings account. You can put up to $2,000 a year for multiple different dependents and have all of that growth tax-free. And the thought process is through all of these accounts is about delaying, eliminating, or reducing taxes. So that's why on the NuView Trust platform, that's why it's on there. It's because we're custodians of those accounts and you get to direct them. I will do a special call out for the Roth IRA. 10 to 15 years ago when our CEO, Glenn Mather, was out and about speaking on the topic of Roth IRAs, it wasn't a widely known concept. Now, more and more people are understanding it a little bit better, and we're starting to see more Roth accounts build in comparison to the other ones. But they're pretty phenomenal because you can pay the tax up front, and when you retired, you've already paid that tax. So I often hear the last time you want to pay taxes is on your last day of working. You don't want to have to worry about taxes when you're no longer working. So something to really think about. So our investment choices. So lots and lots of different things can be held in IRAs. So IRAs is your individual retirement account. There's some creative stuff, and I'm not going to get too deep into that, but certainly lending is on the list here. We're going to talk about that. But probably about 50% of our thousands of clients are invested in one type of real estate. I view lending as about 80% of real estate based too, because real estate tends to be the security instrument for that property. So something to really touch base here is, and if you're online streaming, go ahead and take a screenshot of this. There are some people you cannot deal with in an IRA, and I'll touch on it briefly, but think of it like this. Your IRA is never meant to benefit you while it's an IRA. So you cannot benefit from it, such as buying a property on the beach and going to stay in it for a couple of days and then rent it out for a couple of days. Here's what else you can't do. You can't get a beneficial use out of it. Now, we understand that, but you also are allowed to swing a hammer and rehab the kitchen of an IRA-owned real estate because you're making a non-cash contribution. But you know what is not prohibited is the number one thing that you can do for any property, and there is no banning use of your own creative mind. You can figure out who you want your IRA to go rehab the kitchen for the least amount and negotiate that, and they can go in, that person can go in and rehab that IRA owned property for you. You can't also start a business and fund it with your IRA. Don't forget, one thing that I always tell people is there are people out there who are willing to take your money to teach you to do something that very much can put you at risk. That's why I always say, go back to your CPAs, your attorneys. There's no need for you to be in the gray area. It's black or white. So it's extremely easy. The IRS prohibits little transaction as long as you know that. So here's an example. I always like to reflect back on this. You can see this chart here. This is an example. If go ahead and screenshot this. This is just something to reflect back on if you're able to view this at a massive scale here. You can see this chart here. This is an example of how taxes can really rob you of developing a long-term retirement plan. This is to make a point here. On the left here, if you can see it, on the left here is if you have an investment that gave you 100% of return every year for 20 years, you will have $1 million. But you would only have $1 million if it wasn't taxed. So really look at that number there, up close and personal there. You would only have $1 million if it wasn't taxed. And you can see this here on this chart. But what if 25% of that was taken away? Now this is on the right side. The right is the numbers that if it was done outside of an IRA or a tax advantage account, you're going to pay your ordinary income tax, and it cuts it down to 72. So really, really let that sink in. $1 million or $72,000. We can run the numbers differently to 10%, but this is an example of showing to invest in a tax advantage way. Really take that in. I always tell people, screenshot this. This is something that you can reflect back on. If we can make this screen a little bit larger, focused in here so that the viewers are able to see that. Yeah, look at those numbers there. Really take that in. So all of these choices are available. We'll narrow it down today, and you're going to become the bank. So when you hear of private lending, initially you might think that sounds risky, that might sound tough or complicated. And right now, roughly speaking, mortgages are around, I believe, 5.5% to 6% as I'm speaking to you today. And who would want to lend at that percentage? Who would want to do, who would be willing to take more than a 5.5%, 6% rate? And I know I'd want, if I'm privately lending, I would want more than that. So something to consider here. On the private side, people are willing to pay more because banks might not be their only source of funds. In fact, they might not have any funding at all from banks, or maybe they're overexposed. Maybe they're buying lots of real estate investments. And when you get to a certain level of investments, the bank will say to you, we'll lend you, but we're going to use commercial rules because you own too many single family homes. So we're going to have to give you other rates, which means we get to reprice this every 5 years. So what's really great about private lending is, banks can make their own rules, but guess what? When you are privately lending, you can make your own rules. You get to underwrite, you're creating the terms. And something that you might not know is your IRA can take on debt and provide debt for people that are buying homes. So if I have an IRA that only has 30 to 40% of the amount I need to purchase a property, other IRA people can lend my IRA that money according to the terms that both people are willing to agree to. And if I'm lending, I'm going to create the terms. It's my money. Now, you don't have to take it. You can negotiate with me, or you can go to another lender, but this is my retirement. These are going to be the rules that I want to create. These are the rules that I like. So these are all the things that you can and things that you should consider when you're starting to get into private lending with your IRA. So just to recap here, you can partner up with other IRAs and privately lend. You can go into purchase a property with your IRA. So these are really, really great knowledgeable tidbits that you should be looking at. So how would this benefit you? So you can secure the investment. You get it above average returns. I believe on the private side, the average is anywhere from 8 to 15%. That is on average. Your ability to balance risk and reward. So another benefit is there's no tax on payments. They're never taxed if it's a Roth IRA. So you've purchased your property, and you've privately lent for someone to purchase their property. And what now? What are some things that you need to keep in mind? The first rule is that you love the security that you have. The second thing is that most private lenders look to the integrity of the person. Even though I have something I could foreclose on if you don't pay me, I don't want to go through all of that. So really look at the integrity of the person that you're privately lending to. You're in the business to privately lend, not to foreclose on properties. And there are lots of lending institutions for private lenders. I would suggest going on the internet and finding these places and get more information on this. If you're going to start investing in notes, I would encourage you to get educated about it. The first part I would look at would be the length of the term. So look at the security and the integrity of the person borrowing the money, and then look at the length of time that you're going to pay this off. One of the biggest risks when you lend money is interest rate changes. So really keep those things in mind, keep those things to consider. One rule of thumb that we always say, if you don't want to own a property, you're probably not going to want to privately lend for someone to purchase this property, because you have to think of, in the event of, what is my collateral? Oftentimes people use the actual property as collateral. So collateral, what is collateral? By definition, it's properties or assets that are offered to secure a loan or other credit. Collateral becomes subject to seizure on default. So collateral is really something to secure the loan, and it's put on the loan documents, and a lot of times it's issued out, kind of what a mortgage is. In the state of Florida, which is where we're located, you own the property, but is subject to a lien being paid off. Once again, it's recommendation that you always get this secured. Verify all of these things with your real estate attorney, your CPA, the professionals that know your scenario the best, of course. So these are going to be things that you would want to consider from a lender's perspective. Again, I'm going to mention, do not loan if you don't want to own. If you are not even interested in that, don't lend for people to purchase properties. You pay for repairs after they are done and inspected. Don't loan unless you're willing to foreclose. And if the loan goes into default, act now. Collect interest monthly. If you're unsure about a loan, hire a professional. Always do your due diligence and get with the people who know you best. We are the custodians. We hold your funds. We cannot give you this advice. Your unique financial situation is unique to yourself. Who better to know your scenarios other than the people who have been involved in your finances and your plans, other than your real estate attorneys and CPAs. Get a title insurance for your loan. So these are things that you should think about thoroughly if you're purchasing property. Verify that hazard, and if necessary, flood insurance is in place, naming the lender as the insured. Insist on evidence that the property taxes are paid whenever they become due. Get a personal guarantee if lending to an entity. These are things that you should consider if you're privately lending for a property purchase. It's things that I don't think people who take the time to really reflect back on, unless they have that real estate attorney or CPA assisting them along the way. But if you're just getting started, these are things that you should consider. Who better to help you along the way other than your real estate attorney or your CPA to ensure all of your ducks are in a row. So recapping the cliff notes here, your IRA, your self-directed IRA with NuView, can loan money. All interest, etc., goes back into the IRA. And IRAs earn money tax deferred or tax free, so your traditional or your Roth. Remember, across the board, no matter which custodian you're with, it's still a traditional, it's still a Roth. IRAs earn money tax deferred or tax free. You can make all the lending rules. It's up to that person if they want to take that or if they want to negotiate with you. It is your retirement money. Take it personally. That's what I always say. You must lend at an arm's length. So remember who you're conducting business with. Reflects back on that prohibited parties for transactions slide that we had earlier. Those are the people that you cannot conduct business with. Return of principal is always more important than return on principal. And take control of your financial future. So here's what you can do next. If you want more information specifically on how you can start self-directing and investing in alternative assets with NuView, go ahead and scan this QR code. You'll be able to get right with one of our IRA specialists, and we can find out which account we would be opening for you. You fill out your application, we get your funds moved over, and then you can start privately lending to people who are looking to purchase properties or whatever they're needing to do within IRS guidelines. What's really great about NuView is we're really focused on educating. We have many different topics to get you started, to get you the ideas rolling of everything that you can do. Self-directing and investing in alternative assets can sound complex, and what I always say is where it gets Where it can get complex is the strategies that you want to go ahead and do. But we here at NuView try to make it nice and simple for you to understand. And every single Wednesday, we have our podcast. So it's all about alt. You can find our podcast on our platforms. This week's episode is going to be No Money, No Problem with Syndication Steve. And if you'd like to find out more information about all of the other educational opportunities that we offer, we can send to you. Stay up to date, scan this QR code to make sure that you're getting your topic covered as well too, or submit what topics you would like for us to cover. One other thing that we're at NuView is a part of is Share the Love. If it gives the gift of mobility, please scan this QR code. Check out what we're doing. We're giving people the gift of mobility. It's things that you don't necessarily think of that you or could probably take for granted every single day. And what we're able to do is go out and provide accessibility to people who don't have this. So scan this QR code, find out how you can assist us as well too, or maybe even join and start giving the gift of mobility as well too. So while that's up, our presentation is finished. I'd like to take it back to you and answer any questions that we might have. So Amy, are you able to assist and roll out those questions for us?
Yes, so the first one we have are, what are the typical interest rates, terms, and repayment structures for private lending deals in an IRA?
Yeah, so I mentioned earlier, you can create your own terms, your own length, your own rates. What I do commonly see is that 8 to 12% range, and it really depends on, what the value is, how long this is going to take to pay back. So the beauty of it is I know it's a vague answer, but it's very much in your hands how you want to conduct this. And as I mentioned, it's up to that person if they want to take it or leave it. I know I would be thinking about my retirement and how it would benefit me, and that would be at the forefront of my mind. But 8 to 12% is what we commonly see on the private lending side. So great question.
Great. The next one is, can I use my IRA funds to invest in both traditional assets and private lending opportunities simultaneously?
Yes, you can. So one of the things that we discuss often is diversifying your assets. So it doesn't necessarily have to be one thing. It could be multiple different things. Maybe you're investing in cryptocurrency. We have a really great platform on that. We just did a class on that last week as well too. You can find, if you want to know more information on what we're offering, you can check us out at NuViewTrust.com and find the links to those videos. But diversifying your assets is something that we always like to see.
Great. And the last one from online are, how does the process of setting up a self-directed IRA for private lending differ from a standard IRA?
It's the same. It's the same. So your self-directed IRA is truly self-directed, and it really is what you want it to be. And within our menu of options, that could be anywhere from private lending, or you could even be purchasing properties or purchasing notes, or investing in cryptocurrency. So the beauty of it is, I mentioned earlier, your Roth with another custodian is your Roth at NuView. It's still set up structurally the same. It's just, how are we using that? Well, you hear a lot of the times that our 401ks or IRAs are tied to stocks and bonds. Well, if you're familiar with stocks and bonds, that's great. But maybe you're not, and maybe you're more so familiar with real estate. We see all the time realtors who know real estate like the back of their hands, right, as they should. So invest in what you know best, or diversify your assets. You can have some here, you can have some there. But all in all, it is truly the same thing. I tell people all the time, you're already self-directing, but it's a matter of what you're self-directing in. Changing custodians is not a taxable event. Let's get you to invest in what you know best. And here at NuView, we're able to do that. So I'm glad to be a part of that.
Great, and that's everything from online.
Great, everyone. I'm so happy that you joined us. Please check out our podcast, more of our socials, and stay up to date in the know. But thank you so much for joining us.